The capitalization rates in our multifamily space in the Greater Montreal market right now is hovering around the range of 4 to 4.5%. Meanwhile, the interest rates with the banks are ranging, let's say, around 4.5, 4.6% for CMHC insured loans, and for conventional loans, it's going to be higher, up something in the mid fives, up to 6%. What this means is for the real estate investors, the returns are kind of negative leverage right now, where the cap rates for your properties that you're buying is actually lower than the interest rates that you are paying. So some investors are complaining that at these numbers it makes no sense, that they'd rather be buying bonds or stocks that are high flying and so forth. If this is your first time on my channel, my name is Mikhail Krukchin. I'm a commercial real estate broker, and I really focus on the multifamily market, and I focus a lot on the Greater Montreal region. In this video, I'm going to show to you that really there's no real investment better than in real estate as long as you have the long-term perspective. And even if you look at some narratives which are really the story about buying the stocks or crypto or bonds, these are all narratives. I mean, even real estate as well, it's a narrative, because we're buying an asset thinking and hoping that it's going to appreciate in value, and thinking and hoping that it's going to be giving us rents over the next little while. Meanwhile, if you look at these other investment tools, whether they're crypto or whether they're stocks or whether they're bonds or any kind of other investments, they're all stories that we're buying, hoping that it's going to be a good investment over the long run. Let's look at some high flyers. For example, Amazon, Google, Nvidia these days, which are doing phenomenal. These are all great stocks, great companies. They've been around for many years. Meanwhile, we have no idea if we fast forward over the next 5, 10, 15, 20 years, 30 years, 40 years, are they still going to be around? If you look at many stocks in the stock market, if you go back 20, 30 years, we have no idea which companies are going to be still there over the next 40, 50 years. Obviously, if you're just a trader buying and selling shares of companies for momentum trading or short-term trading, then this doesn't apply to you because you don't care. If you're really a buy and hold investor that want to buy things for the long term, we have no idea when we buy, whether it's crypto, whether we're buying stocks, how they're going to be behaving over the next 5, 10, 15 years, because these companies could be there today and they could be gone tomorrow. Meanwhile, real estate, no matter what happens to the market, and I'm really, when I say real estate, I want to be clear, I mean the multifamily space, because there's an asset class that I truly believe in, that I broker in. I'm also involved in a small partnership that owns a apartment building as well. And this asset class, I believe, is really the number one way of building wealth, because with the multifamily space, you're buying an asset that's generating some cash flow, not really, because the cash is coming in after you pay the mortgage, after you do the expenses of the building for renovations and so forth, it's pretty much gone. But what's happening is over the long run, it's appreciating in value. And why is it really appreciating in value? Because people may ask, well, I bought this asset, prices always go up and so forth, but that's not really the truth. The reason why real estate or real assets really, they appreciate in value is because the way the world economy works now, since something in the early 2000s, maybe even since 2008, but really over if you look at the last 20, 25 years, all the governments around the world, especially the Western world, they basically are basing their economy based on debt, based on printing more money to be able to sustain their high levels of expenses, their high levels of debt for their economies. What this is doing is that it's making currency or the value of things go up, because our dollars are losing value every single year. So if you own real assets, such as things like whether it's gold or whether it's other kind of assets, anything that's going to be appreciating value like real estate, then you could be doing well, because obviously we know rents go up as our dollar loses value. As rents go up, then the property values go up, and eventually you could be ahead with your real estate investment. So to summarize this video, no matter what the interest rates are, obviously I don't mean to say if interest rates are at 4.5%, 5%, they should be buying a property at, let's say, 50 times net or like a 2% cap rate, and those numbers wouldn't make any sense. But even if you feel that you're overpaying for a property for the immediate time being, you're still going to be ahead if your horizon is the long term, because the way things are going and the way things have really gone in recent years is that our dollars are losing value, our currencies are getting debased, and eventually your investment, even though it doesn't look that great today, over the next 5, 10, 15, 20 years, it's going to look great. It's not a company. You're not going to worry about it not being there over the next 20 years because some other competitor came in and did better. Your asset is still there. You're still holding it, and it's still generating cash flow for you over the long run.